FX Nation, what's up, guys? Welcome back to the channel. Welcome back to another video. And guys, in this video, we're going to go ahead and we're going to do a couple different things. First, we're going to take a look at backtesting, and we're going to talk about backtesting, how to actually do it, how to get started with it, so you know exactly what you need to be doing for backtesting. And then also, we're going to take a look at some of the setups that we had today during London and also US session. All right, so without further ado, guys, let's go ahead and let's talk about it. All right, guys, so I've received a lot of requests to do a video about backtesting and how to actually do it, okay? How to get started and how to do it. All right, so we're gonna start off the video that way, just showing you how to do the backtesting, and then we'll go ahead and go into some of the setups from London and also from US session. All right, so let's talk about backtesting, guys. So backtesting, I think, is probably one of the most important things that you need to do in order to be successful in trading Forex. Why is that? Okay, why is backtesting so important? So when you backtest a strategy, or when you backtest how your trading methodology is, your system, whatever it is that you want, how you want to trade, when you backtest that system, okay, it gives you a specific result. Okay, so number one, it allows you to prove that your strategy actually works. Okay, because you're able to trade, you're able to backtest and see if those trades would have worked out or not using your strategy. Okay, so that's number one. Number two, at the end of doing backtesting for however long you do it, whether it be a month, 2 months, a year back, however long you go back to do it, you're going to have very specific data at the end of that that's going to tell you specifically, you know, what your win to loss ratio is, and most importantly, whether or not you're actually profitable over an extended period of time. All right. So very important to know that, because if you don't know whether the strategy works or not, I mean, why the hell are you even trading it to begin with? You know? And then number three, it gives you confidence. It gives you confidence to know, to going into a trade, it gives you the confidence to know how that strategy performs, and you don't get stuck thinking about too many different things. You don't get into a situation where you feel like you're scared of the market. That just all comes when you don't backtest. So when you've never backtested before, and you don't know if that strategy really works or not, you don't believe it, right? To actually trust that strategy. So when you don't trust that strategy that you're doing, you're essentially just trading out of fear, or out of fear of loss, because you want to be in the market to try to make money, but at the same time, you're scared to go into the market because you don't want to lose money, you know? And so you want to make sure that when you backtest, it's one of the things that it does. It gives you confidence, okay, because you can see the consistency over an extended period of time, whether or not that strategy is going to work, what your win to loss ratio is, and whether or not that strategy is going to be profitable based on the win to loss ratio that you have. And the last thing that backtesting is going to allow you to do is it's going to train your mind, your brain, to see the patterns. If you're using at least this strategy here with market makers and stuff like that, it's going to allow your brain to train your brain on seeing the patterns as they happen. Okay, which is hugely important, because it's easy to see the pattern once it's already there, right? So it's easy to see this W here when it's already there. The question is, can you see this W as it's actually developing and as it's actually happening? Okay, because if you can't see it when it's actually happening, then it doesn't matter, because you're not going to be able to trade it and you're never going to catch it. All right. So the first thing that you need in order to backtest is you need to get yourself a TradingView account. Okay. Now I'm only gonna show you the way that I know how to backtest. Okay. There's other ways of backtesting on like MetaTrader 4 and MetaTrader 5. Google those particular methods. This is just the way that I use, and it's the simplest form that I use to backtest. Okay, so first thing is you're going to go to TradingView.com. Okay, and you're going to create an account. All right. Now, very important that when you create an account, you need to make sure that you create a paid account. Okay, so you need to get at least the lowest membership on TradingView, which I believe it's a pro account, and it's $15 a month, right? So what you're going to do is you're going to get a pro account with TradingView. Okay, I'll have all the links in the description. That way you can go directly to the website and stuff like that and get it all set up. But so you get yourself a pro account, okay, and then once you have a pro account, you're able to go into the charts and actually replay any time frame that you want. On a free account, the only thing that you can replay is daily, weekly, monthly. You can't do 4 hour, 1 hour, 15 minute, anything like that. All right, so that's why you need a paid account. Okay, now keep in mind that if you just pay for this one time, okay, for 1 month, all right, pay for the $15 for 1 month, and for that 1 month, all you do is backtest for that whole month. That way you can get your data, and then at the end of the month you can cancel it. It's as simple as that. Okay, but there should be no excuse of spending $15 on TradingView to be able to do backtesting for a month. Okay, if you can't afford $15 to do backtesting for a month, then you probably should not be trading. Okay, because you really don't want to do this full time. You're just like playing with it with a hobby. All right, so get yourself a free account, or get yourself a TradingView account, a pro account. Again, $15 a month, and if you're going to do it, at least do it for a month. All right, once you have the account, okay, what you're going to do is you're going to go up to a pair. It doesn't matter what pair. Let's say here, let's do which one was it here? Let's do AUD CAD. Okay, and what you're going to do is at the very top here, you'll see the button that says replay. And if you click on it, it gives you this red bar. This red bar allows you to click anywhere on the screen where you want to start from. Okay, so let's just say we want to start from here, from this day. So we click on that, and it basically takes away all of the other bars. Okay, and then from there you can literally just play the bars. Now you can adjust the speed here so it's slower. So you'll see that it takes a couple of seconds as the bar displays. You can change it to every 5 seconds, so it'll give you even more time to think. But there, you can see the bars. And you can see the more you move the slider, the faster it moves. Okay, so essentially what you're doing is you're playing this bar, and you can stop it and essentially put out your Asian range. Okay, so put out your Asian range box. So let's say till 2, and just let it play. Okay, so there's your Asian range. That's it. That's your Asian range, right? So now you're going to go ahead and let it play, and then see if you can see the pattern developing, whether it's a type 1, type 2, type 3 setup, right? So you're just going to let it do its thing. And then let's just say that here, let's back it up one candle here. So let's say that right here, we saw a type 2 setup with a with a star formation here, right? So then let's just say that your entry, you pull out this here, you're going long. And then we're trying to get 20, 30 pips or so. Now, this is pretty cool because it allows you to see the trade, right? This is 30 pips, literally, all the way up here. So that's how far you have to go to get 30 pips. Okay. Now you see here on this risk to reward ratio, it tells you you're basically at a 1 to 3 risk to reward ratio. So you're risking 8 pips, which is 8.2. You see that? 8.2 pips to get 30.5 pips. Okay, so that's a 3 to 1, close to almost a 4 to 1 risk to reward ratio. Good risk to reward ratio, right? And I think the important thing is you want to have a minimum of a 2 to 1. Okay, so a minimum of like this, 2 to 1. Okay, so you're risking 10 to gain 20, right? That's a 2 to 1 risk to reward ratio. All right. But anyway, so you do this, you set up the trade like this, and then you play it and then see what happens. So you just play this and then see what happens. Now, here's an interesting thing that I want you to realize what happened. Okay, is number one, that trade that you took only got you 15 pips. Okay, and what the real trade here on this particular scenario was this. What is it that you see right there? Right? And you have your EMAs that are like this. Okay? So that right there would be a better trade for you. That right there was the trade. Okay, and if we play it, we'll see what happens. Boom, boom, boom. You see that? Look at that. So that was your trade. So yes, you could have traded this star formation, right? But you would have needed to be paying attention because right at the end of the trading zone, which is 645, right? We ended up, market maker came up, came back down, accumulated more contracts, came back up to hit it again, and then boom, we dropped. Okay, this was the setup. Okay, this was not the setup on this particular trade. And here's one thing that I'm going to tell you guys is that for you guys that are new to trading this, okay, you want to, instead of trying to trade it out of the edge every time, okay, and I know that there's some trades that are out there that, obviously are, that come out of the edge, and that's fine. Right? This is fine. If you're paying attention to this, okay, and you see, if you're paying attention to this and you took this as a long trade, okay, you need to make sure that you're paying attention because if you get railroad tracks back down, that should be a first indication signal that you need to get out of the trade. Take profit, right? Not to mention that it crossed the yellow EMA, the 5 EMA here. Okay, so that's a good indication of momentum actually dying. All right, but when you see this here, you can't be one so biased that you missed a move, right? You have to understand that they're going to do what they're going to do. Okay? And this here was the initial fake move, okay, that they're making to get people to go long. All right? So then they can go short for 43 pips. All right? So you need to make sure that you are letting this play out. Okay? To help you with that, you can come and start looking at the charts at like 3:30 instead of coming to look at the charts at 1:30. All right? That way you avoid this situation here. Okay? Because you want to let them make their move first. You want to let them show you what they're doing first. You don't want to automatically just assume that they're doing this. Okay? Especially if you're new, you need to make sure that you let them show you what they're doing. Let them show you what they're doing first before you actually trade. Once you get comfortable, once you get consistent at trading that, then you can go ahead and start adding more of trading in both directions. Okay, but you can't be expected to just trade in both directions right out of the gate. The best setups that I want you to concentrate on if you're new is just trade M's and W's, okay, after they've made their initial move. After they made their initial stop hunt. Don't trade until the stop hunt happens. Let them show you what they're doing. Okay? So essentially, this would have been the trade here on this one. All right? And this is what you're doing for basically backtesting is going back, go back to, go back to here. Draw out your Asian range. And hit play. And then once it gets to the end of the Asian range, adjust the Asian range, right, to make sure you got it covered. All right, and then play it, and then let them make their move. Let them show you what they're doing. Here you see, what do you see here? Do you see that? Do you see what they're doing? See how they're riding that low there? So again, guys, backtesting, this is all you're doing, is literally replaying the chart. Okay. You're drawing out your Asian box, and then from there you're just playing it and seeing if you can spot what they're doing. Okay, this would have been a type 3 setup here in the middle of the range. So 1 hit, 2 hit, 3 hit, boom, take off. That's your trade right there. So you're just doing that. That's all you're doing, guys. You're going back. Go all the way back. Go all the way back. Just move all the way back. Doesn't matter. And then start from there. Preferably, the best thing to do would look at your calendar and start on a Sunday. Make sure you start on the beginning of the week, right? That way you can see the whole cycle. Okay? And you're literally just playing. Just playing and trying to see the patterns as they develop. Okay? So that's all you're doing for backtesting, guys. It's very simple to do. Okay, this is the suckiest part about trading, is doing the backtesting. Okay, but I promise you, if you do this, you will train your eye, you will train your brain on seeing these patterns, and you'll have a very, very high rate of success. Okay, by doing this, because you'll know what you're looking for, because you've seen it for months straight, for a year straight, however long back you go. Okay, so your brain will be trained on seeing this stuff, and you will see it. That I can guarantee you, as long as you do this work. This is the work that nobody wants to do, but yet everybody wants to be successful. Everybody wants to make all the big bucks, big money trading, but they don't want to do this. Okay? You want to be successful, you got to do the work. And this is part of the work. All right? So very important that you do this. All right, so now let's go ahead and let's take a look at some of the setups from London and US session. All right, so can you see the setup here already? Here, let's replay it. Why don't we? So let's replay it. What are we looking for? So let's take a look at that. So look at that. We had 1, 2, 3, 4. On the 4th, right at the open of US, we went. Okay. So let's just say if you would have gotten in on this one here because you saw this, okay, you would have possibly gotten out of the trade after 6 bars. 2, 4, 6. 6 bars, you're not in substantial profit, right? So you would have gotten out of the trade and just waited. Okay, just waited. Now, some of you may have seen this as a trade setup, and that's perfectly fine. This railroad track here, right at 6 o'clock in the middle of the trading zone, and that's fine. You could have taken this. This would have given you 30 pips. Okay. But at the same time, once you would have done that, you could have gotten, boom, another one up here going long. Because all they were doing was collecting contracts. So they can do this. Okay. So, very good setup here on pound AUD. Pound CAD, this was one that I took this morning. And this was basically a nice tight Asian range. And then we ended up getting railroad tracks right at 330. And then boom, taking it up. So this one here was 50 pips. So you have two things. One, you have railroad tracks right at the beginning of London. Two, you have pin to the 200 EMA right here. Okay. And then 3, you're at level 1, so you're already expecting a move higher up anyways. Okay, so you want to be a buyer at level 1. You don't want to be a seller. You don't want to counter trend at level 1, because level 1 counter trends 95% of the time don't work unless it's a reset. Okay. But that was the trade setup here for pound CAD. Pound USD actually had a very similar setup, where here's your Asian range, right? Same thing. We're at 330. Boom. You get this nice little setup here, and you're off to the races. This one got you 30 pips. Pound Jappy, again, very similar setup. Asian range right at 330. Got you 30 pips. Euro CAD was another one that I took as well, and this one had a very nice star formation right at 345, 330 right here, and we took this one all the way to the 800. That was a good 42 pips on that particular trade. And look what happens when you get to the 800. Pins, 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 reverse. So you catch another trade here. That's another 40 pips. Okay, so 2 trades on the same pair. Euro USD, very similar setup as well. Right at 330, star pattern right here. And you take that up. This was 27 pips. Euro AUD had a nice setup as well. Right at 345. As you can see here, we're coming down. We're establishing a low right here. You see that? So 1, 2, 3, 4. 4 hits to the low of Asia, and then they get out. Now think about this. All of these EMAs are all pointing down, right? So you know traders are basically thinking sell, sell, sell. So they're selling here, they're selling here, they're selling here, right? Some are even selling here because they're just taking this as a retracement and they're thinking back down again, right? So when everybody's thinking sell, you're thinking buy. Okay. AUD USD, we had another iceberg effect here. As you can see, peaks, 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 and then it just drops right as the US session opens at 9:45 candle. Okay. And if you just draw the Asian box here, you'll end up getting a nice little M formation there, type 2 setup, because it's right at the Asian high. Okay, but the important thing is that you can see the peaks, peaks, peaks as the iceberg effect there. Same thing with AUD JPY. Same effect, same iceberg effect there, right? And then there's the tip of the icebergs, and then the iceberg is all down here. So there's your trade right at 9:15, 9:30, straight down. AUD CAD, we went over star pattern here. You could have traded that up for 15 pips. The bigger trade though was right here when you got issued railroad tracks as the first part of the M came back up to retest, and then they dropped straight. And that was 44, 45 pips. And the last one here was AUD Swiss. Same thing, iceberg effect here, where you have tips, 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 and then it just drops right at 9:15, 9:30. So this was the trade here. All right. So guys, let me know in the comments if you took any of these setups. Let me know if you understand the back testing part in the comments as well. I want to make sure you guys understand it and make sure that you guys feel comfortable doing it. It's pretty simple. Like I said, go to TradingView.com, set up a pro account. If anything, just pay the $15 for the first month. Do the back testing for a month straight. get the data, and then cancel it. I'll have links in the description for TradingView, so that way you can go there and get it. But that's it, guys. So I hope you enjoyed this video. Kind of a mix of backtesting and also just seeing the actual trade setup for the day. Guys, thank you so much for watching my videos. I really appreciate it. Please share with others that might need to see this to help, guys. If you're not part of our chat room, go to fxntrading.com, sign up for the free account, and you'll have a link for the chat. If for any reason I've been getting messages saying that the links for the chat isn't working, let me know if that's happening. I've updated the link, so it shouldn't happen again. But if it is happening, just send me an email or just let me know on Facebook or in the comments here, and I'll send you a new link. All right, guys. But again, thank you so much and have a great night. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.